Hello guys, a very good afternoon to all of you. So guys, we are doing the chapter of account current and we have successfully completed the forward method. Guys, in forward method, we had did two types of working. One is calculating interest for each and every individual transaction, and we did product method where we calculate the product of all the transaction, and then finally on the balance product we calculate interest for one day. Okay, this is forward method, guys. So before we proceed towards the backward method today, I think there's one confusion with regard to a particular student. How this 184 days has come. Why it is not one? How it is 184? Why it should not be 183? Though I explained this in the last class, but still I'll explain one more time here. Guys, transaction date is 1/7. 1st July. It is the balance brought down. Okay, the due date naturally will be 1/7. In the forward method, we try to calculate the number of days from the due date till the date for which you're preparing the account current. Account current is prepared here for 31st December 2019. 31/12/2019. So here is 1/7/2019, 37/2019. Okay. Now guys, when I calculate due date, or let's say number of days, if I calculate the number of days for sale transaction, what do? We say that, sir, in July the transaction date is 37. Sorry, due date is 30 August 2019 is the due date. From that, if I have to calculate 31/12, what do? So August has got 31 days. From that, we'll minus 1 day. 30 days. In August, we've got 31 days. In that, transaction has taken, the due date is on 30th. On 30th, we're supposed to make the payment. So what is the remaining day? 1 day. That is, if by 30 August 2018, sorry, 19, if you're not making the payment, on 30 August 2019 midnight, if you're not making the payment, from 31st onwards, interest will be levied. So in the month of August, if interest will be levied, it will be for 1 day. Then we have plus August ke baad we have September. September is got again 30 days. October is got 31 days. November is got 30 days, and December is got 31 days, including the account date, including 31st. Okay. So please tell me what is the total number of days? 1 plus 30 plus 31 plus 30 plus 31. Is it coming up to 123 days, guys?
Yes, sir.
Right. So now it comes to balance brought down. For this particular transaction, how do we calculate the days? Guys, remember, this is not a particular transaction. This is nowhere a transaction. This is the opening balance. This is the opening balance, which means the transaction, the amount for which is 600 rupees, this transaction has already taken place in the previous period, and the due date also has been the previous period. This is the balance brought down. So if at all I'm calculating interest from 1/7 to 31/12, I need to include even the 1st July also. Normally, 1st July we exclude. From 2nd July we calculate interest. But in case of balance brought down, this is not the date on which transaction happening. Here, guys, on 30/8/2019 is nothing but the last date for making the payment. On this date, if payment is not made, from the next day interest will be calculated. That's why I took 31st August. From 31st August we started calculating. Whereas in balance brought down, guys, this is not a transaction date. Transaction happened in past. So if at all I'm calculating interest, I need to include 1st July also, because the due date for the balance brought down is from the first day of the July, because it is a balance brought down. So here I'll calculate full 31 days of July. I will not minus. Normally what we do, if it was a transaction of a sale, normally 31 days July will be there. In that one I'll minus, and I'll take only 30 days. Because if the transaction has taken place on 1st July, let's say 2 sales is on 1st July, or the due date is on 1st July for the sale, then till 1/7 midnight we give them time to make the payment. But this is not a transaction due date. It is a opening balance. So right from the beginning of the day we have to calculate. So it will be 31 days plus August 31 days plus September 30 plus October 31 plus 30 plus 31. If you do this, you will get 184. Now I hope you're clear that why in balance brought down we are including the due date, and why in the sale or purchase transaction we are excluding the due date, the first date. Am I clear with this or not? Please tell me. Everybody. This was a doubt from one of the student. So I just thought, okay, I'll give a explanation in this class and then proceed towards the next topic. Are you clear why it is 184 days and 123 days? I think rest of the calculations can be done by yourself. Now, guys, in the same question, they have solved using epoch method. Epoch method is also known as backward method. Please put a slash. Please put a slash against epoch method and write as backward method. I don't have the provision to write here, so I'm not writing it. So please make a note. Epoch method is also known as backward method.
So can you repeat?
Epoch method is also called as backward method. If the question they say, please calculate the interest using epoch method or using backward method, means we'll do it in the way we are learning now. We'll learn that now. Now, guys, there are two methods of calculating. One is forward method. Methods for calculating interest. Methods for calculating interest. One is forward method, another is backward method. Which is also called as epoch method. EPOQUE. Yeah, epoch method. Guys, forward method are of two types. Separately, I'll calculate interest for each transaction and then product method. Here, only product method. If they ask you to calculate interest transaction wise separately, then we'll do accordingly. Or else in your syllabus, they have only given you sums related to product method. Now, what does forward method means? Guys, when I calculate the number of days, can I say it is basically the account current date? Account current statement date is there, no? Basically, account current statement date minus due date. Can I say that? In other words, if I have to say you, if I'm preparing, let's say transaction date, particulars, due date, and then days. Okay, what is the statement days? Let's say account current is prepared. Account current is for 31st December 2019. So how do we calculate days? We calculate from the due date. From the due date, we go forward. From the due date, we go forward towards 31/12 and calculate the difference. Am I right or wrong? We go forward. From the due date, we calculate forward and see up to account current statement date, what is the number of days that is left? Please tell me yes or no.
Yes, sir.
Now in backward method, what will happen is, this is my transaction date, particulars, due date, and days. Here also my base is due date only. But I will not go forward. I will not go forward. I'll go backward. Backward means what? I'll go backward to the opening balance. That is, in this account current statement, whatever is the first balance, that first balance transaction date. Let's say if it is balance brought down, this transaction dates, or you can say rather due date of that particular transaction will take the difference between the two. For example, if I come to the second item, due date of this second transaction, you will travel backward. You will take the difference between this date and this date. If I talk about third transaction, you will take the difference between due date and this date. So which means the first transaction's due date is the base. In the case of balance brought down, this due date and the transaction date will be the same. But if balance brought down is not there, if there is any other name called sale or purchase, then that particular transaction due date will be taken as a base, and this you will travel, all the due dates will be traveled backward towards the first day. So let's take an example. Guys. Same example, if you remember, which we did in last class, we did using product method forward. So here, just go through the question, guys. It says that from the following particulars, make up account current to be rendered by Mr. X. So Mr. X is giving to Mr. Y. So we are preparing in Mr. X book. So it is Mr. Y's account current with X. So Mr. Y is my supplier, or he could be my customer, both also. And the statement has to be prepared for 31st December 2019, and the interest rate is 18%. So all this transaction is given, guys. So let's do it. Let's do it. This is Mr. Y in account current with Mr. X. So what do we do normally do? We write the statement name and we write interest. Interest is calculated up to what period? Up to 31st December 2019 at 18% per annum. Then what we'll do, we will write the opening balance, guys. We'll copy paste the information. We'll put down the transactions in this ledger. So balance owing to Mr. Y 600. Nothing but on 1st July, it is two balance brought down 600. So can I say transaction date is not given, guys? Due date is the transaction date. Can I say July 1 will be the due date? Please tell me yes or no.
Yes, sir.
Now, next transaction is goods sold to Mr. Y and credit period is 1 month. 30 July goods are sold, 1 month credit period. So July 30 is sold, 2 sales, August 30. 1 month means August 30 is my date. Amount is 300. Please note down. I want you to freshly note it down. I want you to freshly do it. Only when we do it, you will be able to calculate, guys. Please do it. Please open the new page and copy the heading. Copy these two lines, copy the format, and do the bid part 2 transactions which I've taught you. Please do it, complete it, and tell me. We'll proceed forward.
So it should always be the due date of the first transaction, no, sir?
Sorry?
The first date, I mean, the base date should be the due date of the first transaction, no, sir?
Correct.
Always.
Correct.
Okay, sir.
Guys, once you've copied, let me know. I'll proceed towards the credit side now. Done, guys? Into the credit side now is purchase of goods. So by purchase happening on 1st August and 1 month credit period. So 1st August is the transaction date. By purchase, September 1 is the due date. Amount is 200. And next, if you see, cash is received from Mr. Y. So cash, Mr. Y. So by cash. So September 1 cash is received. By cash, no due date is given. So transaction date is taken as due date. Transaction date is taken as due date. The amount is 100 rupees. Amount is 100 rupees. Please copy till this. It says that Mr. Y accepted a draft of Mr. X. By bills receivable. So this bill is issued on September 1. And the due date we calculated, including the 3 grace days, is supposed to be December 4. And the amount is 400, guys. Please, if you note down, I'll proceed forward after that. Please note down till this. Till this, it's done, guys.
Yes, sir. Done.
Now, normally, what do we do? Normally, we calculate days. Forward method of how do we calculate? We take the difference between this. We calculate the interest from, so let's calculate the number of days from July 1 to 31st December. It is forward. But here, you will not do that. Whatever is the transaction date, what is the first transaction of this? So here, the first transaction I can see is the balance brought down. This particular transaction's due date will be taken as base. This will be taken as base. So base is this. So due date to base, July 1 to July 1, it is 0 days. Now, next transaction, this due date is August 30. From August 30, you will go backward. You will go backward towards this, because this is my freezed due date, guys. This is my freezed base. This one, what I'm marking to you, this is the freezed base. In the forward method, 31st December is the freezed base. This is the base. Whereas in backward method, July, the first transaction's due date is supposed to be the freezed date. So from August 30, guys, I have to go backward towards July 1 and calculate the number of days. Please tell me how many days are there?
60.
August 30 days. And July, you will include that first day also. So guys,
Sorry,
August
sir.
has got 30 days. Plus July 1 is a due date. So July 1 is including that date, including July 1. So 30 plus 1, 31. So 61 days is your due date. Is the day, number of days. Am I clear or not clear? Now coming back to the credit side. What is my due date? In forward method, when I calculate due date, I'll calculate the difference between September 1 to 31st December. Whereas here, the difference will be September 1 to July 1, because July 1 is my base date. So July 31 days are there. Okay, let's go in reverse. In September, how many days are there, guys? How many days I'll take into consideration?
30.
30.
September 1 day, sir.
September 1 is the due date. So September 1 I'll take into consideration. I'll go in reverse. Before September, what it is? August. August 31 days. July 31 days. How much it is? 60. You have to be very careful with this, guys. If you're consciously not able to do this, sometimes at subconscious level we calculate, okay, September has got 30 days, we'll take 30. It is September 1, which means what? What I'll do, July 1 is the due date. 1/7/2019 is the due date. The base date. From here to 1/9/2019. This is the due date, and this is the base date. I'll go backward. So very simple. So while going backward, what I'll do is I'll still do front calculation only. So July has got how many days, including this 1st of July? I will include 1st of July. So 31 days plus August 31 days plus September 1 day. Total is 63. Like this you have to do. Yes, are you able to follow? Now
Sir, I
coming
have one doubt, sir.
yes, boss.
So, for example, in this one, it is two balance brought down, so we are including first, sir.
Correct.
If, for example, the first transaction was 2 sales, will we include that first date?
That will be the first transaction is due date. Will be the base.
So, no, sir. For example, July 1 is also included, no, sir.
Where
In
is
forward
July?
method, we don't. In calculating the number of days, sir, we include
Okay.
that date, no, sir.
Correct.
If it
correct,
was
correct.
two sales instead of balance brought down, if it was 2 sales, still it will be 0 days. I mean, 161 or something else, sir.
It'll be 0 only, no? Because in case if here instead of 2 balance brought down, had it been 2 sales.
Yes, sir.
So for first transaction, can I say due date is July 1 and base date also is July 1? So again,
Yes.
it will be 0 only, no?
So in second one, will we add that July 1?
Which second one?
For example, yeah, we are calculating now, sir, from July 1 to September 1, sir, for by
Background noise is going on. Some class is going on in background, is it?
Yes, sir. 1 minute, I'll silent that.
What is that?
Sir, college classes are running backwards.
Okay.
Sir, for example, from July 1 to buy purchase, no, sir. September 1.
Yeah. So September
Yes,
1 to
sir.
July 1 will go backward.
Yes, sir. How many days will it be if it was 2 sales, sir? Will it be same or?
63.
Okay, sir.
Because base date is July 1. July 1 to September 1, the days will count, it will be 63 only, no?
So, no, sir. Actually, in that forward method, we don't include the first date, no, sir.
Correct. So first in forward method, we don't do. So forward is opposite of backward. So what and all we'll exclude in forward, we'll include in backward. You'll understand when I complete this question, there's so many surprises you'll get here. You'll understand.
Okay.
Let me give me some time. I'll explain you. Now, guys, coming to the next one. Next one again, September 1 is the due date. I have to go backward to July 1. So same 63 days will come here also. Next is December 4. So my starting point is July 1. My starting point is 1st of July. 1/7/2019. And my due date is supposed to be 4th December. 4/12/19. Correct? So you have to go backward. So in July, I'll include the first day, 31 days, plus August 31, plus September 30, July, August, September, October 31, November 30, and December will be 4. Only 4. Please tell me, is it coming up to
157.
Please total and see. Is it coming up to 157?
Yes, sir.
This, are you clear or not?
Yes, sir.
So far, if you see whatever we have done so far, before we calculated due day, before we started calculating days, there was no change. Whatever we did in forward method, same thing we followed here. But when we started calculating days, no, from there the backward calculation will start. In forward method, we calculate days from the due date to the account current statement date. Now here we'll go backward. We'll take one transaction, the first transaction's due date as a base, and every transaction's due date will be mapped backward towards the base date, and we'll calculate the number of days. Now what happens after that? We'll take a product. So please take a product. 600 into 0 will be 0. 300 into 61 is how much? 1,83,000. 18,300. The product of this 200 into 63. How much it is? 1,600. 100 into 63. Then this into 157. We've got this. Guys, till this have you got? Please note it down. Then I'll tell you.
So what's the logic in this? So like forward.
Don't ask logic in this question, because if I start explaining the logic to you, you will even forget the previous method. So I'm not, so in this backward method alone, since we have time constraint, I'm not explaining the logic part here, because we have to complete this and we have 2 more types to do. And if I start explaining the concept of this, you'll get even more confused. And this method is practically not usable anywhere. It is only there in the books. Whereas practically, if you see account current, the forward method, interest and product, both are usable. But backward method, nobody uses it. So since it is there in the syllabus, I'm only doing it because if I start giving you the concept, I fear that you'll forget even the forward method. And I don't want to take that risk.
Yes.
But I had just one doubt, sir. In first one, we are not including July 1, sir. But if you
Correct.
see all other transaction, we include that July
I'll
1.
come. Allow me to complete once again. Allow me to complete. Now, guys, till this we have done it. Bharat, I'll come back to your doubt. Let me complete full part. You will get the clarity. Then what will happen is, guys, now, next step, what you have to do is very important from this step 1. This is my step 1. After doing till this, my step 1 is I need a balance. Which balance? I need a balance of amount. 600 plus 300 is how much? $600 plus 300, is it 900?
Yes, sir.
From 900 on the debit side, on the credit side, if I total, it is 200 plus 100 plus 400. Total is how much? 700.
700.
So can I say debit is more and credit is less
Yes, sir.
to the extent of 200 rupees? I say yes or no?
Yes, sir.
So
Yes, sir.
here you have to take the difference. 200 is the balance days, balance amount. Note it down. In the bracket, how did you get 200? 900 minus 700. The 200. That please. I need to calculate number of days for this also. Now, when you calculate the number of days for this, what from date, which date to which date you will calculate? You will take from the opening date, that is the base due date. From the base due date till the account current statement date, you'll take the number of days calculation. I repeat, here when I calculate the number of days, it will be July 1 to 31st December 19, which is the account current statement date. First, or let's follow one format. July 1 to December 31. Now, this balance of product alone, we're calculating forward from July to 31st December. Please tell me from July 1 to 31st December, how many days? I say July 1 will include, I will include because it's balance brought down. I'll include first day of July also. 31 days of July, August 31, September 30, 31, July, August, September, October, November, plus 31 of 184 days. Are you getting this?
184, sir.
Are you getting 184?
Yes, sir.
Yes, sir.
Take a product of this. Take a product of this. We never take a product of the closing balance. So far in forward method, we never took a product of the balance carried down. But here in backward method, we are taking the balance of the carried down. Don't ask me the logic. I'm not here giving logic because it will put into confusion. I only want you to by heart this. Understand step by step what is happening. I am against by hearting. I know this, but here I don't want to unnecessarily put you in confusion. So 36,800 is the balance of the product. 900 minus 700, that is the balance product 200, for which the interest is not calculated. Guys, what is 200 rupees? 200 rupees is the balance amount for which interest is not calculated. For that, I am calculating the number of days from the beginning and taking a product of this. This is step number 1. This is step number 1. Please tell me, all of you have got this or not? Please tell me. So I would say that getting 200 is step number 1. Then getting number of days is your step number 2. Then product. Is okay, not okay? This, guys.
Understood, sir.
Now we have to calculate interest. Second step is calculation of interest. How do we calculate interest? We take the difference of the product. So the total of the product is how much? What is the total of the product? Is it coming up to be 1,18,500? Is it coming 1,18,500? Please tell me yes or no. This is by balance amount, guys. By balance amount. Are you getting, guys? Are you getting 1,18,500 as a total on the credit side? Please tell me yes or no.
Yes, sir. Got
Yes.
it.
Yes, sir.
So you will get here in the debit side, total is only 18,300. I'll get a balance brought down of the balance brought down to balance of not brought down of product. Balance of the product. This is my step 1. Coming to step 2. How do you take the balance of the product? The total of the credit side is 1,18,500 minus debit side 18,300. This is the balance of the product. Do you agree with me? Yes or no? This is my second step.
Yes, sir.
On this product, I have to calculate interest on 1,200,000 into 18% into 1 by 365. I'll calculate interest for 1 day. Please tell me how much interest you're getting. 1,00200, which is the balance of the product, into basically this into 18%
49.41, sir.
divided by 365. 49 rupees. The same interest we got in the forward method in the last class. Same 49. So whether you do backward method or forward method, guys, answer will be same. Answer will be same. You will record this third one as this 49. Now, guys, tell me this 49 is interest receivable or payable? Please tell me. Why did I put to interest income 49,000? Is it interest receivable or interest payable?
Receiver.
How do you say receivable?
Sir, it is debit side, sir.
Debit side, I have put it. This is 1,02,000 is balance carried on, my dear. bottom will come on credit side. This balance of a product is nothing but balance carried down. Balance carried down, CD of the product, which means balance brought down is coming on the credit side. Then what it's supposed to be? Liability or asset? Will it be a liability or asset?
Liability, sir.
Then if it is liability, on liability will receive interest or pay interest?
We'll pay interest, sir.
Then why it is interest income here? Guys, this is backward method. If you remember in the last class, your debit side was more. 1,47,300, you got debit side more. Credit side, the total was less. It was only 47,100. Hence, you get the balance carried down here on the credit side. It means balance bottom will come on debit side, which means that the amount what we have to receive is more. So interest receivable. Under forward method, if the debit is more, means asset. Asset more means interest receivable. In backward method, it is opposite, guys. Backward method, credit will be more. And if credit is more, it means that it is asset. Are you clear with this now?
Full ulte of that, sir. Means.
Exact opposite of that. Exact, you're right. So in forward method, if your debit side total is more, okay, you will say that it is asset. It means asset bar amount receivable, and hence interest on that will also be receivable. Therefore, such interest is income. But in backward method, your credit side total will be more. Credit side total is more. Credit side, if in backward method, if credit side total is more, it also means asset only, which is amount receivable. Also means amount receivable, and hence interest on that will also be receivable. Therefore, such interest is treated as income. Treated as income. Guys, in backward method, if credit is more, it is asset. In forward method, if debit is more, asset. For liability, it will be opposite. In forward method, if credit side is more. In forward method, if credit side more than debit side, it is liability and interest payable and interest expense. And here, if debit side is more than credit side, then it is also treated as liability plus interest payable will come into picture plus interest expense will come into picture. Are we clear with this or not? Please tell me. Are we clear with this or not? Please tell me. Please note this down, guys. Please note this down.
So can you show that Excel sheet?
This one?
Yes, sir. Sir,
Yes, boss.
the credit side total is not matching, no, sir, amount.
Which one? Amount or product?
Amount, sir.
How will it match? That's what we're taking. No, we are taking total of this, which is 1,18,500. Hmm. No, I'm still not done. I'm still not done.
Amount,
Wait,
sir.
wait, wait. I'm coming. I'm coming. I'm still not done.
Oh,
So
okay.
we have taken 1,200,000 as the balance of the product. On that, we calculated interest income. This is step 3. Now, finally, we have to do the balancing. Step 4. Now, guys, again, we have to balance the amount column. Amount column is still not balanced. So you have to do the balance of the amount column, guys. So fourth step finally is the balancing of the amount column. 600 plus 300 plus 900 is 949. Whereas here on the debit side, it is only 900. So balance carried on will always be equal to interest element. Balance carried on will always be equal to the interest element, 49 rupees. This is the fourth and final step. Now is it matching, Bharat? Both put together is 249. In your textbook, they've done 249. If you see here, they've done 249. How this 249 came, you'll be thinking the presentation is wrong here. This is the right presentation. If I have to go in the order of order of solving question, this is the order of solving question. First, I'll derive the difference of the amount, 100. Then I'll calculate the number of days. This will alone be forward. And take the product and take the balance of the product. On that, calculate interest, record the interest income or interest expense entry, and then finally get the balance of the amount column again. Are you able to understand or understand? The only way to buy at is the only way to remember this is to buy at this, because if I keep on explaining, this is no end.
Sir,
And I
can
don't
you
expect this
come
kind
up
of
with
question to come also. In your syllabus, they've given only one question. So let me not waste again too much of time. Just remember this, practice this 3 or 4 times, understand the concept. How do we start? We will write down all the transaction, guys. In backward method, just like forward method, we'll note down all the transaction. That is transaction date, note it down. Particulars date, note it down. Due date also note it down. Till recording due date, no change. Till recording even amount, even note down the amount. Till this point, there is no change. The change will begin from the calculation of days. In forward method, I'll calculate from due date to the account statement date, up to which I'm preparing the account current. No, till that date, I'll calculate the interest. Whereas in backward method, I will take the first transaction's due date as a base, and I'll calculate all the other due dates with the base due date. August 30 will be calculated with July 1. September 1 will be compared and calculated till July 1. December 4 will be calculated and compared till July 1. Get the days, calculate the product. After that, calculate the balance of the amount column, get the difference. Now calculate the number of days. Now the number of days what we calculate here is tricky here, because here it is not backward, it is forward. We calculate from the July 1 till 31st December. Take the product of that and get the balance of the product. That is the second step. Get the balance of the product. On that, calculate the interest income or expense. Guys, you have to be very careful. The balance carried down is coming on debit side, which means credit is more, debit is less. It is backward. So here asset will become liability, liability will become asset. So now 1,200,000, despite the balance coming on the debit side, it is asset. Hence, it is interest receivable and interest income. After calculating interest income, finally take the amount of balance carried on of the amount column. Always remember the balance carried on will be equal to the interest income. Because this part, when we balanced it, we got 200. We got 200 already. If you see, after recording this 200 rupees, only one transaction we recorded after that is 49 on the debit side. So obviously balance carried on will be the same value, no? After balancing 200 rupees, only one transaction. After balancing 200 rupees, only one transaction is here, which is interest. Obviously, the balance carried on will be that only. 49. Okay, not okay. Please tell me, guys. Total balance carried on. If I have to say total of the balance carried on, means these two put together are the total balance carried on. Which means amount column is done balance carried on twice. Once in the middle, once at the end. So likewise, the total balance carried on will become for me 249 total. Total will become 249. Am I clear or not clear? Please tell me.
Clear, sir.
So you have to practice this question minimum 2 or 3 times, guys. You will definitely get a hang. Without practicing, if you think that I'll remember and do it in the exam, not possible. Minimum 3 times you have to practice. Maybe once today before you sleep. Maybe after 3 days, maybe this Sunday you can do once, and next Sunday you can do once. Whenever you get time, you will be